Hi again, everyone. I hope you're all doing really well. Today has been quite an interesting day for me. While living my best lockdown life in Melbourne, I got to experience a 6.0 Richter scale earthquake from the top floor of a high-rise building. So it has been a pretty interesting day. Anyway, with this video, I want to talk about a stock which I haven't looked at too deeply and really am keen to hear what you guys actually think about the stock, that being Lucid Motors, or ticker symbol LCID. So it has been hard to not hear about Lucid Motors in recent times, and last week was definitely no exception. The company, which is still yet to fulfill a customer order with their upcoming luxury model EV release, the Lucid Air Dream, has been on a tear over the last few sessions, which has been perhaps spurred on in part by some positive news at the end of last week, where the company was upgraded to a buy from Bank of America with a $30 12-month price target. And the news that the new model has officially got the longest range of all EV vehicles per single charge, with the Air Dream being measured to have a range of 520 miles per charge versus Tesla's Model S range of only 405 miles per charge. So there has been a lot of good news around the stock. Interestingly, however, Morgan Stanley, who have not yet upgraded their ratings since they started following the stock when it went public, have a $12 valuation, which may be revised in the near future. But at this stage, it's really hard to say where I think the stock is valued. I want to know what you guys think about where the stock should be priced. Is $12 too low and is $30 too high, or are they both completely wrong? Let me know what you think. As we can see, since Tuesday last week, the stock has been running hot, jumping from $18.95 to be at $26.81 as of market close yesterday, representing about a 30% increase on the stock in this 6-day period. The stock has clearly been overbought in recent times based on both the RSI data and what can be observed in the Bollinger Bands. But it has been in this position for some time, and it makes me think that perhaps a short-term correction may not be forthcoming as technically one might expect it to be. This is also particularly impressive when there has been such widespread worry around macro conditions across all markets lately, aka Evergrande Group, Fed meetings, weaker inflation, poor economic data, and the whole kit and caboodle which we've been hearing about in recent times. And despite all this, Lucid has continued to maintain most of its momentum from the day into the aftermarket, where it did not see too much ground. But when you look at the market cap for the stock, I have to wonder, is it justified to be so high, or is it too inflated for where it should be? There seems to be a lot of faith placed in the definite potential the company has. However, there seems to be a few other items which are not being as focused on with the company at the moment. And perhaps in an attempt to be contrarian, I found an interesting article that was released during the Tuesday session of Yahoo Finance that does summarize some of the problems facing Lucid Motors and represents the sole bearish piece I've been able to find in the last couple of days from a mainstream source. I will post the article in the video description, but a summary of the problems the company faced in the article were: there is a chip shortage going on, which could be something that constrains the growth of Lucid Motors, although the fact that they're only going to be producing small numbers in the short term may alleviate some of those problems, but it's still something worth keeping an eye on. Also, Lucid Motors has a lawsuit/class action against them for failure to make disclosures about the true nature of production for the company, and this could be a source of discouragement among investors, although at the moment it doesn't seem to be. Obviously, because they're not selling anything, the company is burning cash. Obviously, they'll have more cash now that they have gone public, but from the 30th of June 2021 and the 30th of June 2020, the company actually now carries 72% less cash in that space of time. And obviously, with the setting up for production and the retooling costs, the company has been running large operating losses, particularly in the most recent annual report. We've already touched a little bit upon the stretched valuation, but again, that was noted in this article. And the last thing I want to talk about is that they have received poor POWR ratings, which is a rating system for judging stocks for investors. Overall, Lucid has been given a D, with the company scoring an F for growth, value, and sentiment, and being balanced out by the fact that it got a C for stability. Now, obviously, a lot of this is pinned to the fact that they don't sell anything yet, and I'm sure these will upgrade once they do start delivering on their orders, but it's still a reflection of where the company is at present day. Anyway, in the article, they gave a bottom line, which is here at the top of the page, that LCID's weak financials and poor profitability do not justify its stretched valuation. Also, it could take a few years for the company to generate a stable revenue stream because of the current semiconductor chip shortage and production cuts. Thus, we believe LCID is best avoided for now. While a lot of this does not sound good for the company in relation to the current hot streak it has been on, it makes you wonder if the analyst who wrote it was being too conservative about this. Obviously, from a revenue and cash flow perspective, Lucid Motors still have their best days ahead of them, especially when they start delivering later this year. It is also worth keeping in mind that it will take them some time to be able to ramp up production and deliveries to a point that makes them profitable. It took Tesla many years to actually finally reach a point of profitability. So Lucid Motors still has this path before them, which becomes even more complicated when the existing larger automotive industries also start moving into the EV space, which is just going to make it even more competitive for Lucid. Speaking of competitors, I think there is another problem that Lucid may face, and that is regarding their company identity. They are marketing themselves as a high-end luxury vehicle, and they want this to be something that distinguishes them from their most obvious comparable competitor, Tesla. Now, I'm no luxury car expert, and I do agree with the part of the label that Lucid has tried to pin on Tesla in the sense that they are an innovative company. But I do not agree with Tesla as being labelled non-luxury. In fact, I will generally put it in the same bracket as the luxury competitors that Lucid has identified in their investor presentation. The main difference I see between Tesla and BMW, Mercedes and Audi, other than the fact that Tesla is not German, is that I see Tesla as being a more innovative company. And that leaves the question, where does Lucid see their vehicles in this spectrum? I really don't think they will be all that different from Tesla in the longer term. They are basically following the production blueprint that Tesla did, sell a luxury car, i.e. the Roadster, and build a brand before offering a more affordable model to the masses when production capacity allows for it. For Lucid, they are at a critical point where they really do need to be aware of their branding and how they are perceived by the public, and that is at the moment the new or next Tesla, for the fact that they are entering the EV space as a purely EV car maker and targeting the general population in the longer term. In fact, I think for Lucid to remain relevant, they will actually need to focus on how they can be better than and compete with Tesla, perhaps in the space of innovation. And they certainly have an early ace up their sleeve with their recent single charge range accolade that we mentioned at the start of this video. I think that trying to compare themselves to the luxury European cars that they have tried to in this presentation is not a great idea. These are all huge companies who are all eventually moving towards EVs in the near future, and when they do so, they will be able to swamp Lucid with, I'm guessing, superior production capacity from their legacy of facilities and the economies of scale that they are able to tap into. So I honestly think Lucid need to accept that they are being seen as the new rival to Tesla. The alternative image they are trying to cultivate of being further up market than Tesla will see them move out of the mainstream, which they are actually trying to target, and they will be sort of more competing with the likes of car companies like Jaguar and Bentley. And I don't think that is where Lucid wants to be. In recent times, I've also heard talks of a short squeeze around LCID stock, though that is very much the catchphrase of the internet and stocks these days. And with only 8.35% of the outstanding float shorted, the stock is not even considered highly short. So I'm happy to dispel those rumors as contributing factors behind the elevated stock price for now. So that leaves the question, where should the stock be priced at? What do you guys think? Anyway, I'm a fan of what Lucid is doing, but for me, it does feel like there is an overvaluation of the stock at the moment. But I'd like to hear what you guys think. Are you feeling the same about the stock being overpriced, or is it justified? Let me know what you think about Lucid in the comments. And that's it for me. Until next time, may the markets trade in your favour. Cheers.